I don't know if you caught this on the daily financial news for January 10th, but I was sharing an article with that Jamie Dimon thinks that we could be on the cusp of repeating the 1970s. As someone who was born in 72, I have very vague memories of the 70s being just a terrible decade, mainly because in my family, it was not a decade full of a lot of money. It was a pretty stressful time, as I recall. So what I thought we would do is we would take something that we've created on this channel called the 53-year spreadsheet, which I give away for free on my website, onerentalatatime.com, and just pull it up and go back and revisit the 1970s. We could look at houses, transactions, income, interest rates, inflation. We could do real versus nominal. There's lots of variables that we could look at, and we're going to do this with Mr. Jonathan Twanley. How are you doing, sir?
I'm doing really well, and I have to say, I have some PTSD from the 70s involving some bell-bottom jeans that I was made to wear. So I, for one, really hope that the 70s aren't coming back because it was a pretty traumatic time. So
Yeah,
putting everything else about the 70s aside, it was, just those bell-bottoms alone was enough to
Yeah, I mean, before I pull up the spreadsheet, when I think about the 70s, again, and we're going to look at the data. We have 10-year, we have data back to 1970. I remember that was the oil embargoes. I think kind of we were in the late 70s. I remember gas lines. I remember having to go to gas stations based on your license plate, right? Different days of the week.
Yeah.
I remember unemployment, at least based on my family's experience, was pretty high for pretty long. I don't have fond memories, but maybe there's something I'm missing. So any kind of thoughts or memories of the 70s, maybe just for your research or memories?
Well, yeah, I mean, I'm actually just a couple of years older than you, so I was born in 1969, so I remember probably a little bit more of it than you do, especially your early 70s. But I do, and also there was a lot of bad sort of family stuff happening for me as well in the 70s, so that colors everything. But I do kind of remember it being just sort of like a dark time,
Yeah.
like just where things just didn't seem to be going right. And I also, I mean, I remember the whole, gas line thing and when the oil embargo in the 70s, the late 70s, and like inflation always being a thing and interest rates being really high. And now I can't remember, and then I can't remember if this was actually in the 70s or the early 80s, but I remember the Hunt brothers trying to corner the market.
Oh, corner silver. Yeah, I think that was the 70s. I could be wrong.
It could have been like right around 1979 or something, but I remember the like listening on the radio every day about the price of silver.
It's just like going up. It went up to like $50 or something, right?
Yeah, it was crazy. Yeah, I mean, it was a big thing, and the price of gold, going really high and everything. So because we would listen to the news every morning while we ate breakfast, and that would be, between all the commercials, the news radio was like seemed like 70% commercials and 30% news, but between the commercials you get a little bit of information, and then part of it was always sort of like the price of gold. So I remember being very conscious of at the age of like 10 about the price of gold and the price of silver, and it was all very dramatic as the
it's funny you bring that up, because I never knew where it came from, but when I remember telling myself when I was in my 20s, I wanted two things to know that I made it for whatever reason. One was a Rolex watch, and the other was an ounce of gold. It had to be that kind of just, gold's over 1100 or 14, and these are, 1970 or whatever they were. So I don't know why. I mean, I still have that first ounce of gold just because I was that big a memory. I don't know why, but
that's funny. I remember actually I got an ounce of silver in my Christmas stocking one year.
Nice.
And I don't know what happened to it. I don't know where. Actually, I think honestly what happened to it is I think that we had a break-in in our house, and I had I had a coin collection, and that was probably one of the things that was taken. So I lost my Troy ounce of silver, that I got in my Christmas stocking. But anyway.
Yeah, well, you know what? Let's pull up the 53-year spreadsheet, soon to be 54 once we get data for last year. But let's see what the 1970s, because really what I think Jamie Dimon is telling us and what I remember about it, it was a decade of no real growth. It was just kind of sideways market. It was just not a lot of fun. So let's actually go down to GDP first.
Yeah. So the stock market was basically flat for the entire decade of the 70s, right? So
Yeah, well,
that's what,
I
yeah,
have it here. Let's
yeah,
see. So it goes all the way out to column K. So S&P 500. Yeah, essentially. Oh, it went up. No, it went up 10% for the decade. It went from
yeah,
90 to 99.
yeah,
Yeah, it was not a, I mean, in the peak was 118.
yeah. But look, if you bought when it was 72, you did
Yeah,
okay.
yeah.
So timing kind of matters, right? People always say, "Oh, you can't time the market, can't time the market," but timing actually does matter in
Yeah.
terms of your returns.
And then the other thing I remember about the 70s is the first time, again, when I studied economics, we always looked at the 70s and 80s because we needed to understand nominal versus real. Check out
Yeah,
the nominal growth for the S&P, over, the decade.
yeah,
And then not real, right? If you adjust for inflation,
yeah.
very different numbers.
It's interesting too. I'm what's jumping out here to me is the median family income grew a lot. It almost doubled during the 70s, right? And line 18,
Thank you. Yep,
yeah.
there it is. Yeah.
And the
Oh, it
real
did
median,
double. Yeah.
yeah. And the real income actually, surprisingly, given that inflation is the story, the real median income actually grew
Yeah,
as well.
it
So
did.
I don't think that you've seen that kind of growth for family incomes in any decade since then. I mean, where you've had like essentially doubling, you know.
No. Yeah, let's actually do. So what is the nominal wage growth? What's the average? So the average is 7.6% for the decade.
Mm,
That's nominal. And then if you
right.
do real,
But I wonder why what's the
four,
real average?
4 points, or no, here it is. Average is 0.46.
Yeah,
So
so I
half a
wonder,
percent.
so it's strange that real family income though ro rose by, you know, it's nearly double, right? That's
What's this calculation? You never know. Maybe I got the calculation wrong. K18, 26. Yeah, so we're adjusting. Yeah, so that's right. Yeah. This needs to be, I don't think this doesn't feel right to me.
mm,
Okay, yeah. Oh, so it's going backwards. I see what it's doing. So it's basing it on the previous year. So that's what we're doing. Okay.
right, right.
Right. Okay. Yeah, I'll look at those numbers. But yeah, family income roughly. This is one of the things that I look at the 70s and I am reminded why the 30-year mortgage is so good.
Right.
Because, especially if you're a landlord, right? Because if you can fix your debt payment and then interest rates go up, you don't do anything. But if interest rates go down, you refi.
Yeah.
But rents go up,
Right.
right? Rents go up and your debt structure stays the same. I don't know if I ever added rent to this. I added vacancies. I don't think I
So
ever collected rent.
what's another thing though that interests me about this?
Mhm.
If you look at the income, the median income versus the median house price,
Yep.
it's a little bit more than 3 times, right? Actually, well. You see some inflation here because look at the 1970. It's like 2.5 times less than that, but 2.5 times.
Yep.
Yeah. Oh, I see. So you already have that calculated,
I do.
and
Yeah.
then it grows to about 3. But where is it now?
Today it's almost 6, I think, or 5
Yeah.
something. Yeah, it's over 5 today.
So clearly, like we have not kept up building enough homes, you know, over this
Well,
period of time.
it's funny. It's funny. There's a lot of people talking about median price to income. So I actually went and did a chart,
Hmm.
right? So this is that data we just looked at, right? So it takes the median price divided by household income and just graphs it. And
Hmm.
clearly, we've never been here before, at least in the
Yeah.
last 53 years. But as you know, you have to also look at debt, right? Because we
Yeah.
don't pay cash for homes. It comes a very different story if you do payments to income.
Interesting.
Yeah, because one of the things that really bothers me about the price to household is what it says about 1981. 1981 was the most unaffordable year ever to buy a
Hmm.
home. It's even worse than today. But if you go back to price to income, 81 wasn't that bad,
Yeah.
right? It was, below the median. It was at 296. I guess 308. So,
Yeah.
um, I mean, that's obviously because interest rates, right? Where were
We're at
interest rates?
20%. Yeah, they're 20% or something, right?
That was 81, I think. Here we
Yeah.
go. So interest rates. Oh, I got to go back to the 70s. Sorry, big spreadsheet. Interest rate. Well, they started the decade at 8,
Yeah.
and they spiked the last year to 11, but they were
Yeah.
basically 8.5 to 9 the whole decade.
Yeah.
Mhm.
And then look, I mean, the whole 80s when people were feeling pretty good
Mhm.
about things. I mean, look how high interest rates are. Even we
Yeah,
just like keep on. I mean, obviously the early 80s they were very high, but they were.
yeah,
I
they
mean,
were
if you
pretty
just
high.
keep on going out the 80s,
Let's do the whole decade. So the average 30-year mortgage rate was 12.7% in the
yeah.
80s.
And I don't really remember people complaining about it all that much.
No, I don't either.
Yeah,
Well, I guess what I was hearing back then, now I'm a little bit older, I actually have a job in the 80s.
yeah.
Savings accounts were paying, I want to say 8 or 9%.
Oh yeah, no, I remember my mom talking about like my mom like taking me to the bank and I had like a passbook savings account and
Yeah, exactly.
she's like, look at all this interest you're getting. This is like what you're supposed to do. You're supposed to put your money in the bank and
Yeah.
get interest. And it's like free money. It isn't this
Mhm.
great, you know?
Yeah.
And yeah, so it's just I mean, I guess everything is relative, you know, but when people are complaining about interest rates now,
Yeah.
they they have it's just because the differential right between where they were
Correct.
and where they are feels very painful. But I mean, if you can you imagine like if
Yeah.
interest rates went to 10% or 12% right now, I mean, just
Yeah.
the world would end. You
Yeah,
know?
exactly. Yeah, the other thing that was interesting, which I haven't looked at before, was how like existing home sales for
Yeah.
they started the decade at 1.6, but even with rates, 9 to 10%,
Yeah.
they got up to 3 point almost 4, let's call it 4 million, right? They more than doubled. Housing,
Yeah.
I would not have, if you were to ask me about the 1970s, I would not have guessed that.
Yeah.
Existing home sales doubled, more than
Well,
doubled.
listen, I mean, I think this is because like the baby boomers were getting into prime home buying age, right? The
Uh,
early baby boomers
yeah.
were, if you say like 1946, now you're talking about 33 years old. In
Mhm.
those days, people had children earlier, right? So they had
Yeah.
someone at 33 probably had a couple of kids. The oldest one was probably about 9 or 10,
Yeah.
and they were buying houses, you know.
Yeah.
It's it's amazing they sort of drop off the cliff the next year though. Look at that. From
Yeah.
3.8 to
Well,
2.9.
guess what happens when interest rates go up? It
Yeah.
affects transactions.
Well, how much did they go up though? They didn't go up that much though. I mean, it went
They
up
went
two
up from
points.
11 to 13
Yeah.
7. Yeah.
Yeah. I guess
And then
there's probably some lag because it was at 9.64 before,
right.
the year before. So there's probably some closing still going on, but
Yeah. Yeah.
yeah, it's kind of, but it's interesting though, because you look at like 1976,
Okay.
just over 3 million homes
Yep.
are bought and sold. 1978, 2 years later, almost a million more, and interest
Yeah.
rates are almost a point higher.
Yep.
So clearly, like the demand for houses was just outstripping that interest rate effect. Like people just were not.
Yeah. Well, look. Oh, dude, look at this. The 3 years you called out. Look at nominal wage growth.
Yeah.
9, 7, and 10. Oh,
Yeah. Well, this is the high inflation point, right? This is
yeah.
where you had the wage
Wage
price
spiral.
spiral. Yeah, the wage price
Exactly.
spiral, right? But it's not like nominal wage growth was like bad before that, though. I mean, look, that
No. Yeah.
8 point, it's solid through the whole decade, and it continues to be solid into the 1980s.
Yeah.
Where does that stop? I mean, if we
Where
just
does
go,
nominal? Where does
yeah,
it?
nominal wage growth.
Let's just highlight this
I mean, look,
part.
then you start getting into the late 80s, and that's where it just starts
Yeah. Oh yeah, there we go.
to just
91. Nope.
yeah.
Yeah, recession time frame.
Yeah, but then it just goes into has got a three handle on it.
Yep.
Sorry, I'm looking at where am I lost
The
track. Which
highlighted
one
row
is? Oh yeah,
2020.
yeah, yeah, yeah. Oh, so Oh, so yeah, so early 90s it tanks, but then it continues to be pretty strong
Yep,
through the 90s. So
yep. Then it gets weak again,
yeah,
2001, 2, 3.
yeah, recession.
Another recession, yeah. Oh, goes
Yeah,
negative in '09.
yeah,
Ooh, yeah.
interesting. Statistics are interesting.
Yeah, and it's just again, right? Jamie Dimon's talking about a rough decade again. It's low growth. Stock market does nothing for it, right? 10%. Oh, can you imagine
Yeah.
10% growth in a decade?
Yeah. Well, I guess that's interesting though. Like, because what is he saying? Because I mean, we're looking at some of these statistics, and certainly the stock. If you're purely looking at the stock market, then the stock market went sideways for a whole decade.
Hmm.
But looking at this, like, seems like other things did not necessarily go as sideways as maybe it felt like at the time, because you have strong wage growth, you've got price appreciation for houses,
Hmm.
right? It's still
Hmm.
affordable.
Yeah.
It doesn't sound so bad. It just
What did GDP do? So we got GDP down here, row 32. All right, so what did it do for the decade? Oh, one more. So for the decade, GDP was, cumulative 3.1, average 3%.
Yeah, I
Again,
mean, average
that's
for
a
10
not,
years, that's
yeah,
30% growth. I mean,
yeah,
that's pretty good, right?
yeah, yeah. For the United States, it's pretty good.
Yeah.
Yeah. What else can we look at? Real wage growth. Yeah. So again, it's really interesting to me. I guess what I would look at this and saying that if you can find an asset with fixed rate debt that is inflation protected, you
Yeah.
probably did pretty good,
Yeah.
right? If you bought a house in 1970 and you held it to 1980, you did okay.
Yeah. But also, I mean, if you bought a house in 1979 at 16% interest, and you
Mhm.
could afford that,
Right.
and then you just kept on refinancing all the way down,
You would
right?
love
You also
life.
did
Yeah.
pretty well, right? You
Yeah.
know?
Yeah. Now, where's price? Where's median home price? Oh, here it is. No, that's appreciation. I'm just trying to find my median home price. Oh, there it is. No, that's number of new homes, ownership. This is what happens when you have all this data. Where is it? Median home price. Oh, there it is. Duh. Right there, row 3. So it goes from 23 to 62.
Yeah.
Wow. That's more than a double.
Yeah. So you did pretty well.
Yeah, my
And I
goodness.
wonder, do you have a debt service? Like, if you bought in 1970, what
Mhm.
was your monthly debt service? Do you have
So
that?
I do have that. So I have
Yeah.
I assumed 20%, I believe, because I had to
Yeah.
assume something. And then I took the average interest rate and I have your payment here. And then I just did the affordability index.
Right.
Yeah,
So if you bought in 1970, your payment is 144 a month,
correct.
right?
Mhm.
I
Yeah.
mean, and you've got all this appreciation, and assuming you don't refinance,
Yeah.
like, man, you're
And
like,
your
yeah,
income doubles.
yeah,
That payment goes to nothing.
yeah, yeah. I mean, this is why, you want to be a debtor in an inflationary environment, right?
Exactly. You want to be
Yeah.
a debtor in fixed debt
Fixed debt.
in,
Yes. Yeah.
in an inflationary environment. Yeah. Yeah.
Yeah.
You can use inflation and get rich. That's
Yeah.
for sure.
Absolutely. I
It
mean,
wasn't the stock market, that's for sure. You lost
yeah.
money in the stock market.
But if you were in real estate, you did fine.
That's exact. I didn't know what this would show.
Yeah.
Yeah. Pretty crazy. So at the end of the day, I think really what Jamie Dimon is trying to say is I think we're going to have we saw a lot of appreciation in the stock market and frankly housing as well over the last couple of years, and we're going to have a couple of sideways years. I
Yeah.
think that's really what he's trying to get everybody, ready for sideways, I think.
Yeah. And the thing too, I think, there's a pattern of like strong returns followed by weak returns followed by strong returns, right? There's that.
Correct.
And the 60s, I think, your data doesn't go back that far, but if my memory just from studying, because obviously I don't remember it personally, but from studying it,
Yeah, no.
if that serves right, the 60s was one of the great bull markets in
Yeah,
stocks,
I don't
right?
know.
So
Yeah.
I believe it was.
Okay. Yeah, I believe
So,
you. Yeah.
yeah.
And then the last thing to look at here is the misery index. This became very
Mm.
common in the 80s, right? The misery index is
Yeah.
unemployment plus inflation. It's a very simple thing. But it wasn't really that bad.
Yeah. Until the end of the 70s, like right
Yeah,
in
right.
1980.
Yeah, 79, 80. Yeah.
Right. You can see why Carter lost the election, right? Because
Exactly.
yeah, because the misery index got really high, right?
Got,
So
got crazy. Yep.
yeah.
Yep. So, oh, well, that was fun to look at. Jonathan, I appreciate you. Where can people reach out, find you, see what stuff you're working on?
Yeah. So if you would like to join my investor list, please Google Two Bridges Asset Management LLC and fill out the investor form. We've got a couple of things working at the moment, including a ground up construction deal, and I'm always looking at new hotels, etc. So come by, and if you'd like to just get on my, sort of get into my community, just check out Apartment Investors Club. You can get the free download and get on my email list that way.
Awesome. Jonathan, thank you so much.
Absolutely.